Hello friends, today I have with me Raghunath here, who everyone knows that he is the creator of Opstra. Most of the people always ask us which are the features which they should regularly use. Since there are almost 30 features, maybe more in Opstra, so of course everyone can't use every feature every day. Depending on what kind of a trader you are, there are some features which are more important than the others, and which is what we are going to talk about. In case you don't know, the Opstra is on two platforms. One is Definite Solutions and one is Definite Securities. The platform opstra.definitesecurities.com is basically with a demat account of Definite, and there are a lot of other benefits in terms of the price is less, you get wallet points, so effectively for an active trader it becomes almost free, the Opstra Pro product. And even for Opstra for Solutions you can get a free trial. Even for Opstra for Securities, if you open a new account you get a 2 months free trial to use the Pro products. So now coming to those features, so let's start, Raghunath.
Yeah, so we are going to talk about the most commonly used features, and that you want to know how you can use these features and what is the importance of these features. So first we are going to talk about a lot of open interest features. So we will begin with the most important one, which is open interest itself. Okay, so here we have open interest charts. Okay, basically these are nothing but the open interest in the form of a bar chart. So at each strike price, you have call option open interest and put option open interest. And at the bottom of that open interest chart, you also have open interest change bars. So if somebody don't want to follow the just OI, but you want to follow the OI change, then that is also possible here. Now, if you hover on any bar which represents one particular strike price, you will have the data like in terms of Greeks, in terms of PCR, and other information
For that specific strike price.
For that specific strike price, or both call as well as put strike price. So you have so much of information there.
And this is on a real-time basis, right?
Yeah, this is so usually the open interest always has minimum time frame of 3 minutes.
Yeah.
So you cannot get anything below that.
Right.
So it's always 3 minutes, no matter, even if you have real-time data also, you'll always get open interest every 3 minutes.
Yeah, that is because the exchange data for open interest comes with an interval of 3 minutes.
Yeah. So this is the open interest chart, and as you can see, the green ones are the call options, and the red bars are the put options. That represents the put option strike. So based on this, you can determine that where is call option build-up OI is building up, and where the put options OI is building up. And then you can make a decision that if there is a fight between this put option and call option builders, then you will see that the equal number of put options OI as well as call options OI.
Yeah, for example, here if you see the biggest nearest tower or bar, which is 25,000, which means that the open interest of the 25,000 call is the highest. And even if you see on the lower pane, the change that has also gone up today. So there is more call writing at 25,000 for expiry of 19 June.
Yes. So there is more call writing happened today, for example, because we are looking at 13 June of 2025.
Yeah.
So that's how you can just look at and see what is a bird's eye view of what is happening in the options price as well as open interest. Okay.
Yeah. So this like I said, this just gives a bird's eye view, a very broad view. This is not something on the basis of which you can trade, because finally you have to go deeper into the aspects. But then this just tells you that okay, 25,000 is a big wall right now, and maybe 25. What is this red? The biggest red one?
Biggest
nearest. No,
nearest
that
is this one.
So that is 24,500. So basically, big put writing at 24,500, and though Nifty went below it today in the morning, it opened below that. But still, those OI, even if you see the change, that has gone up.
Yes.
So today, though Nifty gapped down below 24,500, these OI put OI build-up did not change. That would have gone down if they had panicked. That has not happened. At the same time, 25,000 is a very big resistance as per this.
Yeah. So yeah, that is like very basic interpretation, and we have other open interest tools which have much more information, and we are going to talk about them later. And another thing about this open interest chart is that you can actually go back in time, like what is the open interest yesterday, what is a week ago for this particular expiry and for this particular ticker. So as you can see here, you can change, like if you want to look at Bank Nifty or Reliance, you can change the ticker. And if you want to see what is the open interest for
monthly expiry
or weekly expiry and all that. So all those things you can change. Okay. And another thing is that you can actually, if somebody is going through charts, like open interest charts, and see if there is some interesting pattern, you can simply click on next and previous. That simply goes to, like, if you click on next, it goes to Bank Nifty.
That from the list.
Yeah, from the list. And then it goes to Fin Nifty. And then goes to whatever next
Mid-cap Nifty.
index is. Yeah. So you can, even Sensex, you see, even in Sensex.
Yeah,
you can
another
see
question. Another question which since I saw Sensex, I remembered we get a lot of questions about Sensex and commodities data in Opstra. It is definitely there, but it is under defined securities because in defined solutions we have data only for NSE FNO, whereas for defined securities we have data for all markets, all segments. So for Sensex and commodities, we definitely have data in Opstra for defined securities.
So one can click on next or previous, and or even you can use your arrow button on your keyboard, and then you can move forward and see, like, is there any pattern within the indices or stocks?
In a way, those who are used to the trade point terminology, so to speak, are used to what Raju used to call it tuck indicator. So just do next.
Yeah. So as you can see, you can go back in time and see how the open interest was yesterday and day before yesterday, or even more time. Okay. I think you can go almost 1.5 months back and see how the open interest has built up. Okay, so that is the open interest bar charts. Okay, now there is another tab called as OI Buildup. Okay,
it is the second tab on the right,
Yes.
next to open interest.
Yes. So in the OI Buildup, it gives a bird's eye view of what happening at each and every strike price, both for put options as well as call options. So as you know, in the buildup, you have 4 kinds of categories, right? You have long buildup, you have short covering, you have short buildup, and long unwinding. So we have given different color codes for each kind of buildup. Okay, in the long buildup, both OI goes up and also the price goes up, and in the short covering, OI goes down and price goes up, right? So same way we have different definitions for all these things. So here, just based on today's what has happened, it has gapped down, right? It was a bearish day for us. As you can see on the top, almost it closed down around minus 0.7%. The Nifty. So overall it was a bearish day. So just looking at this, okay, long build-up and short covering, these are like bullish kind of scenario, right, for any given option. And short build-up and long unwinding, which means that is bearish, right?
So the lower pane which is red are the calls, the upper pane which is green are the puts. So what it shows is there is long build-up as well as short covering in
the
puts.
Put options, which means that is bullish for the put options and bearish for the market. At the same time, the call options had a bearish outlook, which exactly what has happened, right?
Yeah.
And also bearish for the market.
So this also you can go back and see for yesterday, just to
just
out
go
of
to
curiosity.
open interest and go back and see yesterday. And it changes, right? So from yesterday itself, the market was bearish. Just looking at this particular heat
So
map.
in fact, all red was a lot of short build-up in calls was happening. A lot of buying was happening in the puts, and this was yesterday, even before the, so to speak, that war headline came only overnight and the gap down. But then even yesterday, of course, Nifty was weak, but this was continuing from yesterday.
Yes. So that's how you can look at this OI build-up and get an understanding what is happening in the market at each and every strike price. Is there any pattern? If all the options are behaving in the same way or in a different way. So you can make an educated guess, like, is it going to be sideways, or is it going to be bearish, or is it going to be bullish?
In fact, that brings me to one thing. If it is a bit confusing, that means the market is also confused. So better to leave that aside. Don't take a view on that. If it is so clear like this, that everything is green on the top and red on the bottom, that means it is definitely bearish. If it is not clear, then just leave it.
Yes.
So the next feature under the open interest tab is total open interest. Now this total open interest is, the name is a bit misleading. It is not total open interest. It is basically what is done is, if you see here Nifty, the expiry is given and then the strike price is given, which typically at the starting of the day is the at the money price, strike price at about 9:30 a.m. And then this says 6. So what is this 6? So basically the ATM is the base strike price, 6 higher, 6 lower. which makes it 13 strike prices, and call and put of each, which makes it 26 strike prices, 26 symbols. So basically what is going on at the back end is total open interest feature is looking at 26 symbols at any given point of time and dynamically calculating the open interest as well as the change in open interest, and based on a proprietary formula, it is what gets plotted is just one single line. I'll hide the others over here. So basically it just gets plotted as a single line, and let me show you 25,000 from yesterday. So this is the TOI with 25,000 as the base strike price for, this is yesterday, this is today. If I hide everything else, the blue line which appears is the line which has been calculated, which is called TOI line. And sometimes it happens that it is not as smooth as it appears over here. So that's why we have added a couple of moving averages. So what we recommend is 10 and 30. 20 is just added because some users requested one more or ek de do. De denge. Chalo. So if you want 10, 20, 30 or 20 and 30, you can decide. What we had given first was 10 and 30. In fact, that you can change here also. And Nifty also appears as, this is Nifty futures, which appears as a area chart, just to get an idea of what is happening. So this is the Nifty futures area chart, the blue one below the TOI. And this was very clear from yesterday around 10:30 in the morning that Nifty is becoming weak. And of course, today now it is no longer at 25,000. So this, looking at this chart now when Nifty is 24,700 is not proper. So if we go back to, go to another strike price, which is the current ATM. So you have to just add this and click on, and this remains saved on the left hand side. So even if you want to revisit it tomorrow, it remains there. So this is choppy in a sense because it is not clear. In fact, earlier in the last 3-4 days, it was going up because market was bullish. Yesterday also, it did not become too bearish because what happens is how to interpret it. When the blue line is below the two moving averages, that means it is bearish. If the blue line, which is the TOI line, is above the two moving averages, it is bullish. Bullish for the underlying. So here it did drop down in the morning, but everyone knows market recovered slightly in the second half. So that's why in a way it is undecided. So it is not very clear whether the bullish, as per the TOI, whether the close was bullish or bearish. If you go to stocks, let's say TCS, what happens in stocks is, so automatically you will see here the number of strikes has changed to 2. Now this is something which is a simple logical thing because in Nifty or Bank Nifty, even 6 higher and 6 lower strikes are fairly liquid. In fact, very liquid. That is not the case in stocks. For example, right now, let's say TCS is 3440. And if I go to 3460, 3480, 35, 3520, 3560 at the strike price of 3560, maybe the put might be, the in the money, deep in the money is never liquid. So the put will definitely not be liquid. The call will be liquid, but both need to be liquid. So what we have observed over the years is, and that is why by default it comes as 2. In stocks, it is better to have only 2 strikes. So 1 plus 2 plus 2, 5 into 2, 10. So instead of 26 for Nifty and Bank Nifty, this is 10 for stocks. So if I click on TCS 3440, which is the current. So right now what this means, by default it is 15 minutes time frame which you need to follow for a positional basis. So TCS was bullish earlier, became bearish since yesterday, and it is slightly going up now. So if it recovers, if it remains like this on Monday, that means TCS is becoming bullish. So that once you have this information, then you can go to the price chart of TCS and then decide whether, what is the entry for the long, what is the stop loss and those things. But this just basically gives an idea of what is happening below the surface in terms of open interest, that it is definitely not bearish right now. So in case you want to be short, there might be something else which is clearly bearish, but definitely not TCS because this appears to be turning up now.
AP, sometimes it also happens that TOI in a different direction and the underlying is in a different direction. So what to do under those conditions?
Now, if you are taking TOI as one of the studies in your trading method, in those cases, I would suggest avoid it.
Okay.
Because OI is not, what it means is basically those who are well aware of open interest and the FNO segment. It is very well known that the open interest plays a major role in futures as well as options. So if they themselves are not very clear of what they want to do, then why are we traders fighting with them? So there are other cases which are very clear, so stick to those. I have seen one thing, maybe those stocks can be range bound.
Okay.
or rather non-directional. So maybe this is something I have not tried, but maybe those who tried it, I have seen it in the past, but not on a regular basis. Maybe there you can try some non-directional strategies.
Okay.
That is one possibility.
Okay.
But otherwise, when the trend is very clear, like it was for Nifty yesterday, it is very clearly bullish. So first thing, don't be bullish at all. It was bearish, so look for bearish opportunities.
Okay.
So that is what it means. Okay, now another thing which we have under open interest is historical TOI. This is something which unfortunately we have spoken about earlier, but a lot of people are not aware. Now let's say you want to backtest a system, maybe for the last 2 years. It involves some work over here because everything cannot be automatic. But let's say I have a system on which I want to test Nifty with respect to TOI for the last 2 years. What I have to do is open this historical TOI tab, go to we have data from 2019, so almost 6.5 years now. Go to any old date, let's say 25th April 2024, which is more than almost 14 months back. One thing I need to do there is I'll have to find out the ATM price because this is as per the future.
It is updated.
Okay, now it is updated. So this is futures, so this is 22,575. So I'll have to take 22,500. So now what I have is Nifty of 25th April 2004. When Nifty was 22,500, and the same way if I click on TOI here, this shows me what was Nifty TOI doing, and if I have a backtest, a trading system for Nifty, I can go back and check what the TOI was trying to do. So in case you want to incorporate TOI in your trading system, you can do the backtest here. There is a bit of manual work involved, but it is worth it because I know a lot of people who have done this and have fine-tuned their Nifty system based on this. Because many times what happens, the price chart is not very clearly bullish or bearish, but TOI gives a different picture. So they know what can be expected. Okay. So that is where historical TOI can be used. Same way it can be used for stocks as well. So in case you want to find out what was happening to, let's say, Infi before the results, last quarter results. So you can go to that date and see what was the TOI suggesting. Most of the times the market follows what the TOI was suggesting. Yes. Very rarely it will be opposite. So it very clearly gives the direction of that stock, whether it is bullish, bearish, or sometimes it can be very choppy. That means the stock is sideways. So this is about historical TOI. Yeah, another feature which is less talked about, but definitely it is very useful, more so in case of weekly expiries. Because many times what happens is, let's say, for example, 25,000 strike price was bearish yesterday. But we have introduced something over here where if I select 25,000, I'm going to yesterday's scenario. And then again 6 is going to remain the same, and I select 100 points strike width, which will be 25,000 plus 100, 25,000 and 25,000 minus 100, and include 50s also to calculate. And if I add this as the chart, so here you have to click on add multi TOI. This takes some bit more time than the normal TOI because what you are doing here is basically plotting 3 TOIs instead of 1. So it takes 25,000 as the base for one TOI, 25,100 as the base for another TOI, and 24,900 as the base for the third TOI. So all 3 calculations are done, and then what is plotted is 3 lines. I'll hide Nifty. Here, unfortunately, there are no moving averages because it will become meaningless. But what this does do definitely is when all 3 are going in the same direction, that shows the strength of that trend. Yes. I have seen on many occasions where, let's say, the upper one is not following the one which is in the middle base strike price. That means that is going to act as a resistance. Okay. Or if the market is going down, if the lower one is not going down the same way as the upper other 2, that means that is a support. Maybe
so we can see.
Yeah, in fact, that is what is happening now. Or if we go to current, let's say 24,700, which is the current at the money, and if I add this TOI, so now it will take 24,600, 700 and 800. So see, this is choppy. So they are also confused. No one knows what is going to happen in terms of headlines in the war. And another case is, since this is a weekly expiry, the weekly options are fairly liquid only for the last 1 week or so.
Yes.
So that's why you don't get a well-populated chart. You'll get a much better chart in terms of when you look at the monthly options. In weekly, that chart is not so well populated. But that much, it is very clear over here that the 3 TOIs are not in sync. They're not going together up or down. So that means it is a bit choppy. Wait for further clarity and then take a call on Monday when the market opens. So that is what multi-TOI. And here you can do the same thing with stocks also. I mean, just to give an example. People keep laughing at me because every time I give the example of Reliance, so I'm not going to talk about Reliance today. So Infi, yeah, it is at 1600. So here again it will be two symbols. And if I add multi TOI, again what it is doing is which strikes it has selected, it is given at the bottom pane 1600. It is just one higher and one lower, 1620 and 1580. So this is also not very clear. Maybe you can say that it was bearish till a couple of days back and now it is sideways. So definitely not bearish, definitely not bullish. So maybe that is what Infi is right now, and I think that is what happened today. Here, if I add the chart of Infi, it is choppy. So it helps in identifying whether the trend is very strong or it is going to meet headwinds higher or support lower. So in that way it helps, and then you can devise your strategy. What I know can be done is, let's say you're long in Nifty futures and then you see maybe from 24,700 it has gone to 25,000. At that point the strike price of 25,100 multi TOI is going flat. It is not rising.
Yes.
That means that is the resistance. There you can sell a call. So automatically you hedge your position. That doesn't mean you should remove your Nifty futures, but that can act as that is how you can use it.
So so if it is going to be choppy, maybe you can use non-directional strategies like straddles, strangles, or even iron condor and all.
Yeah.
Based on this, you know whether the underlying is showing a strong direction or not using TOI, or it is choppy. Accordingly, you can design what strategy you want to trade or not.
So it basically tells you what is the trend and what is the strength of the trend.
Yeah.
Similar to multi-TOI is multi-ticker TOI, where you can plot in a way, now whoever is conversant with the term relative strength, which is a ratio chart. Now this is something similar, but this is only with respect to the OI. So this calculates the TOI for Nifty and TOI for Bank Nifty and then plots it as a ratio. So that is also quite revealing sometimes, where which one is stronger, or let's say both are in a downtrend. Then the ratio chart will tell you, no, this is weaker than the other one. That is what this will tell you. So here you can select select the ATM for Nifty, select the ATM for Bank Nifty and plot. Now just as an example, if I plot over here, it takes the current ATM values. And if I add multi-ticker, so I'll hide the Nifty and Bank Nifty charts. So if both are going together in the same, like multi-TOI, that means it is a universal, they say, what is the term which is used? So it's a secular trend where everything is Nifty, Bank Nifty, which means 50 stocks plus these 12 stocks. Of course, some are part of Nifty also, but both indices are in the same direction.
Okay.
In fact, I have seen on a few occasions where let's say market opens bearish, Nifty is going down, Nifty TOI is going down, but somewhere around 12 o'clock, 1 o'clock, the Bank Nifty TOI started going up, which means Bank Nifty is becoming bullish compared to Nifty. So that is how this helps. You can also plot stocks. So in case this is only Nifty, Bank Nifty. So in case you want to see TCS versus Infi, or typically it should be in the same sector. Or HDFC Bank versus Axis Bank, those kind of TOIs. So that will help.
So AP, in this case, for example, if there is a divergence between Nifty and Bank Nifty or any other two stocks, can we use this for like pair trading kind of?
Exactly, that is what I was about to come. So anyone who is conversant with pair trades, this is a very useful tool. Of course, we have a separate tool for pairs trading. We have a separate video also, which a lot of people have started trading based on that. But this can be an additional tool for pairs trading.
So if you see divergence between two underlyings, it could be stocks, it could be indices, then one can think of devising a pair trading strategy based on that.
Yeah.
Is that right?
Yes. So the next one is put call OI dynamics.
In put call OI dynamics, it's very simple, nothing complicated here. What we do here is we plot the total OI of put options of the any given underlying or stock, or in call options, the total number of call option open interest
Across all strikes.
All strikes.
So unlike
that particular
TOI,
expiry.
Yeah, but unlike TOI where it was 26, here it is not 26, it's a complete option chain.
It's everything. So now let's take an example of the current weekly expiry of Nifty, and then we'll simply add. So here you can see on the title as well, this is 19 June 2025 expiry of Nifty. So here in the green we have call open interest, the total call open interest, and in the red we have put open interest. This is total open interest, okay?
So this total open interest is just an addition of across all strike prices.
Yes, all the strike prices of that particular expiry
Yeah.
for that particular ticker.
Yeah.
So now just by looking this, we can say that it is kind of, so we can say that this is kind of sideways, right?
Yeah, in fact, that is what happened
Yeah.
to the market after a big gap down.
Yes. So here you can also see something called as PE minus CE. Okay, this is also our proprietary formula.
That is a purple line.
Yeah, purple line. So purple line tells you like what is really happening between these two, between put open interest and call open interest. So if this purple one also is sideways, then the market will also be sideways. So that is the interpretation based on total open interest. Now, even more interesting is the change in OI. So in the other tab we have seen the total open interest, right? But in this tab we see that change in open interest across all the strikes. Okay, maybe we should take an example of last 5 days.
Yeah. Yeah, here we have an option of giving 1 day,
day
and 5 days.
yeah.
Because earlier it was only for that 1 day, which was
Yes.
sort of an intraday basis.
Yeah.
But then we changed it, we added the 5-day tab.
So if somebody is intraday trader and they want to use this kind of tool, then they can use by clicking on 1 day. So if you look at the 5-day scenario, it clearly shows that it is bearish from this.
Yeah,
point of
actually,
time. Yeah.
just looking at the purple line itself is enough.
Yeah, that's enough.
Yeah.
And this
And you can hide the others.
Yeah, you can hide and you can also do like this.
Yeah.
But even the put OI change and call OI change also its own story,
Yes.
because there is a crossover here.
Correct.
The call options are overtaking the put option OI, the change.
Yeah.
Okay, which means there is a strong change that more people are either selling, buying, whatever it may be. That the open interest of call is crossing the open interest of put options.
And more
The change.
important is this is across all strike
All strikes, yeah.
prices for that expiry. So that is
Yeah.
it's a complete picture of that open interest.
So whenever then there is this crossover, that indicates that there is a change in trend.
Yeah.
Okay. So as you can see, exactly at this point of time, there is a change in trend and it has started become bearish. So that is a strong signal. In the converse, if there is a, for example, here there is a crossover of put OI change
Going above, yeah.
above, then you see some bullish phenomenon here,
Yeah.
right? And again, there is a trend change. So that is how you can interpret this change in OI as well as total open interest using this purple line as well as individual
Green and red
call
line.
OI and put OI lines. Okay, so that's how you can interpret.
And this is possible for stocks also. I mean,
Yes,
for
yes.
anything which has options liquidity.
Yes, we can take an example of something that has gone down today. Let's say Adani Ports. Okay, so let's take this and see what happened. Okay,
Yeah.
so as you can see here,
In fact, this is for the last 3 days, it was completely bearish. It
Yes,
was, even if you hide the underlying chart, the blue line,
yeah,
it is very clear that it was bearish. So that is something which I always say. First thing is you should ask what you should not do.
yeah,
So don't even look for longs in this stock.
yes. So you can clear interpretation is bearish, and as call OI buildup is happening here, and put OI is pretty much flat till here. Only today, now
First
you can
time,
start see to increase in the put OI buildup. That kind of made this into sideways, choppy,
Yeah.
and this pretty much follows what is happening in the broader market.
So does that mean whenever you are tracking a stock
Yeah.
and when you see that the green line is well above the red line and the purple is coming down, that means that stock is bearish.
Yes.
And if there is a crossover,
Yeah.
which means the green is coming below the red and the purple line starts going up, that means you can look for bullish trades in
Bullish
that.
trends, because there is a change in trend.
Yeah.
Then only that crossover happens. As long as that crossover doesn't happen, then there is no change in trend. So accordingly, you can decide whether you want to have a bullish trade or bearish trade, and you can decide what you want to do.
Yeah, it tells you the current status of the trend.
Yes.
And then you have to just follow the trailing techniques, trend following techniques. I know it is easier said than done
Yeah.
because people are always looking for mean reversion.
Yes.
So that is not the case here. It just tells you that trend is continuing and follow the trend.
And also, I mean, based on the crossover, you can see that there is a change in trend.
Yeah, once you get a crossover, then you can
Then you
reverse.
change
Yeah.
the trend. So that's how I would interpret these.
Yeah, in other words,
Portfolio dynamics.
don't try to be long in a stock unless there is a crossover
Yes.
from a short to
Yes.
bearish to bullish.
Basically, it is trying to say don't fight the
Yeah.
trend.
Yeah.
So be with the trend and accordingly you choose whatever strategy suits as per that particular trend. So that is put call OI dynamics. In this, instead of total OI, I will focus more on change in OI. That is more indicative because that is real time change that is happening in the market at that point of time.
So unlike TOI where for stocks it was only 2 plus 1 plus 2, here it is across all the complete option chain.
Yeah. So every 3 minutes you can update, and then here also you can look at intraday as you know today what has happened. That also is shown. It is kind of choppy because both call options are also building up and put options also building up. So kind of see, as you can see here at the end there was a crossover.
Yes.
And that indicates that there might be some
bullish action.
So that you can confirm on Monday what will happen.
Just see the price chart. What happened?
Okay.
This is interesting.
Yeah. This is interesting.
There's not much action in the price, but options, OI says that it is bullish. So this is advance notice also.
Yes, advance notice. What might happen on Monday? We don't know.
Yeah.
But we'll see whether this will continue or whether it will be bullish or not. We'll see on Monday. So that's how we can interpret this put OI call dynamics, put and call OI dynamics, because it's very dynamic, and that's why I call it as dynamics. And also there is another option called historical. If you check this, see here we are only giving for 5 days, right? So if somebody wants to check what has happened, maybe on
so it's like a
1 week
backtest?
ago. Yeah, it's kind of backtest. So let's say last Friday, what has happened last Friday? I want to do. Then you can add last Friday and check what happened on that day. So as you can see on that particular.
So that time it was bullish.
Total bullish. See, there is a crossover, confirmation, and then bullish. So that's how it's kind of very.
But this is only Friday or 5 days? There you can also see 5 days, right? Or
there we can see on that particular day.
So in historical you can see only 1 day.
Only 1 day. So that's the power of this particular tool. So we have given the interpretation, and you can make your own interpretation by looking at the charts and strategize accordingly which trade to follow or not. Now let's talk about yet another feature which many people may not know, but it might be very interesting. It is called as options buildup tool. So what is options buildup tool? It actually looks at what has happened for any given strike throughout the day. For example, today, what has happened to 24,750? Maybe not 27, maybe we look at 24,700. So we fetch the data. So what it does is that what has happened each and every minute. Was it the short covering at that point of time? Was there a long build-up, short build-up, and a long unwinding, right? So now we can do two things here, positional or intra. Intra means it will only look at 1 minute change, okay? So it will look at what has, with respect to the beginning time, what has happened.
So only from morning till market open to market close.
Yeah. But if you look at the positional, it checks with respect to yesterday's price.
Okay.
Yesterday's.
So the first reading in the morning will be with respect to the yesterday's closing.
Yes. So as you can see clearly, for this 24,700 option, for both call option as put option, there is a clear trend, right?
Yes. So on the left is the call, right is the put.
Yes. So there was a long build-up for the put options because the market was bearish, and there's a short build-up because people were shorting call options because the market is going down. So you can see clear trends on this options build-up tool for different strike prices. So in the morning you can open at the money strike price and see how the build-up is happening. If you see some clear trend, you will see only one particular thing, just short build-up or just long build-up.
Yeah, and that is every couple of minutes.
Yes.
If it is repeating again and again, that means it's a very clear, strong trend.
Strong trend. And then you can accordingly decide what to do with that information. And then you can look at 3 minute, 5 minute, 15 minute data. And so that's all information you can get. Even PCR you can get at that particular each and every minute.
Yeah, typically PCR, what it means is above 1.2, it is, for a strike price, how it changes. Sometimes there can be a drastic change in the trend intraday. So that can be useful. Typically on expiry days.
Yeah. So that is options build-up. Now let's look at another tool which is called as historical chart.
It is under options.
It is under options menu if you go to historical chart. So in the historical charts, you can actually build strategies. For example, I want to build a short straddle or short triangle. or any spread historically, you can go up to 5 years, let's say, and see what has-
2019 again, right?
Yeah.
6 years. Yeah.
Yes, and you can want to know what exactly happened for that particular strategy at that point of time. Okay.
And this is the chart. So in
is
case
the
you are
chart
using
form,
the
yeah.
simulator or the option op test, back test.
Yes.
So there you'll see that it got stopped out.
Automatic.
What happened on the chart, you can come here and cross
Yeah.
check.
So, for example, in the April expiry, the market went down and gave a sharp correction, right? Now, if you want to know what has happened to the short straddle for
Yeah.
that expiry, then you can go back and look at what happened to that particular short straddle. Now, let's say I've initiated a short straddle at the beginning of this April expiry. So 27 March was the
Yeah.
March expiry. So next day, Friday,
So 23,400.
yeah, 28 March. So
Yeah.
the closing price was around 23,600 or
600,
something
yeah.
like that. So you can actually go choose
the April
24
expiry,
expiry, and then you can choose 24,600
Call and put. Yeah.
call and put option. Buy, sell, it doesn't matter.
Yeah, the
because-
chart will be the same.
Same.
So you have to add to strategy, again select the put and then add to strategy.
Yes, 24,600 put option.
And then once you add, you have to save the strategy.
Yeah, save. You can.
So you can make a name,
change the
give a name also.
Okay, short straddle
April.
Okay.
Yeah.
And then we save it and then just save it. Click on save strategy. Now you can see here the reconstruction of that particular strategy. Clearly you see.
Yeah. Throughout the month, it will tell you how it has behaved
Yes.
in terms of as a straddle chart. It's not a individual chart.
So when there was a sudden fall in the market,
Yeah.
the straddle price went up.
In fact, it went up from 700 to 2,500.
Yeah. 1,000 I think
Yeah.
almost. Actually it happened on 7th of April.
That was a panic bottom
Yes.
when Nifty bottomed out actually.
Yes. So we can zoom this out
Yeah.
and we can see here.
Hmm.
So what happened? And there is a huge rise in short straddle price. Okay.
Yeah.
And here, post the correction, post the reversal of this particular market downward move, as you can see, there is a fall in the premiums of the.
Yeah, because the one thing which is important is we are talking about 24,600 straddle.
Yeah.
But when you are talking about the bottom of Nifty, that time it was below 22,000.
Yes. We can also plot that out.
Exactly. So that
example,
would give a better picture.
22, let's say at the bottom it
Yeah.
was 22,000.
Yeah.
Let's say. So 22,000 put option
Yeah.
and 22,000 call option.
Yeah, earlier from the March expiry till 7th April, it went down because the market was going down, and naturally the straddle, the lower straddle keeps going down because that is where the call option takes it down. But then once Nifty bottomed out and from 21,943 or so, which was the low, it started going up, this straddle started going up.
So that's how you can use this historical option. So you can not just short straddle, it could be ratio spreads, it could be bull call spread.
In fact, it can be a single naked call or put also.
Exactly, anything. It can be anything. So that's how you can also do chart-based backtesting, for example.
Of course, it's a visual backtest. You'll have to enter and then whoever has the passion to do that, it will be a good weekend homework.
So these are the different tools that we wanted to talk about, which I think you will find useful in your trading analysis. You may not trade, but you can analyze and then make a decision what to do or not do. So I hope that you will find all these tools and features very useful. And we hope that you go and test all these tools for yourself and see how you can use them in your own trading.
We encourage you to use these features, and in case you have any questions, you can write to us at opstra@definance.com or call us on our support number. And in case you like this video, do subscribe to our channel, like it and share it with your friends. Thank you.
Thank you.